Hey everybody, it's your boy Chicago Sean McLaughlin. How's everybody doing? I'm joined today with my good old pal Steve Strazza. What's up, Strazza?
Not much. How's it going, man?
Oh man, we've had an eventful day today. You and I were talking this morning about putting a trade on in Cisco, and because we're just guys that pay attention to price, we don't read the news. We didn't know that there was an investor day going on today, and boy, it's we've had some crazy price action happening today. Let's talk about what we were looking at, and let's kind of frame it before the investor day action started happening today. We were looking at this morning, and we were looking at a daily chart. I'm sorry, not a daily chart. We were looking at a 20-year chart of monthly candles, and we were checking out how Cisco looks like it's ready to make a big pop. Tell me what you're seeing here in this chart.
It's it's something we've seen so many times over the past almost 10 years now, since Microsoft and Adobe and stocks like that started breaking out of their bases. But there's so much price memory and dead bodies at these dot-com bubble highs that when we see tech stocks, whether it's semiconductors, software, anything, when we see tech stocks start building this base higher and then break out above those former highs, it's usually something we want to be a part of, to say the least.
I love that you called it a bunch of dead bodies. I just
I mean, a lot of people say, how could there be price memory from 20 years ago? Well, we brought along some charts that kind of speak for themselves.
Well, it makes sense because Cisco 20 years ago and continuing to today has always been a mega cap. Even after the big sell off, it was still a mega cap, and a mega cap is owned by all the largest players on Wall Street, right? Every mutual fund, every hedge fund, any tracking index that's tracking the NASDAQ or the S&P 500, they're in Cisco. So, yeah, there's a lot of dead bodies, a lot of people out there that are thinking, if I could finally get even on this thing I've been holding forever. So that has been overhead supply, but we're starting to get a hint that maybe, just maybe, the big breakout's coming. And I mean, this popped on our radar. I should have mentioned at the top. The reason this stock even popped on our radar is because it showed up on the options flow report, right?
Yeah, there was some bullish call activity in it last week, I guess probably ahead of this analyst meeting, but the chart was set up to break out anyway. We're dealing with a 3-year, multi-year base here. I think it's breaking above its 2018 highs. You could see it there in the table. It saw, if you go to the close-up chart, the zoomed-in chart of Cisco, it'll show that little base on base. So we saw September 17th calls at 58.50 on the offer. So it's always nice to know that there's big money in the options market betting alongside of us.
Right. And, hindsight being 2020, it's probably pretty safe to say that those big plays that were happening in the options market this week and over the last couple of weeks probably had a lot to do with the event that's taking place today. It's an investor day event, a lot of news breaking. People who've been following Cisco intraday today have seen some pretty wild gyrations for Cisco. I mean, let's keep it all in perspective. It's, a dollar move in Cisco is kind of a big deal for a mega cap stock like that. And so, yeah, that's probably what that option flow was for. But you know what? As I wrote in the post that I published today, look, great. If that's what the reason was, that's fine. They're playing a different game than what we're playing. Those are short-term traders doing that. But we're grateful that they were, because that surfaced this stock up on on our scans and brought it up on our radar. And then we kind of took a step back and said, whoa, look at this chart. Look at what's happening here when you really zoom out. We could be on the cusp of a big breakout here.
Yeah, that's a great point. We're not buying this because of its investor day or analyst day today at all. Look at the chart. It speaks for itself. It's beautiful. It's a base on base, like we like to say. If it breaks above those former highs from 2018 or 2019, whenever that was, it's probably headed higher, and it's probably headed above our price target anyway. It's probably heading back to those 2001 highs. And then from there, you know,
Right.
probably go higher. It takes those out.
So when we were talking this morning, the one thing I loved is like, hey man, if we've got a price target of 74, and you said it's potentially can go even higher than that. It could shoot for the all-time highs, but
Yeah, which
but
is around 80,
what's that?
which is around 80, the
Okay,
dot-com highs.
great. So we were looking at the options market, and the time frame that we're thinking is if this thing really gets ahead of steam, it's gonna make a run at 74 probably within the next 4 months. So with that info, I started looking at the options, and these 70 strike calls in January options, which is 4 months from now. I mean, they're way out of the money. I mean, way out of the money in Cisco terms, right? They only have like a 9 delta, which is not the type of calls I usually buy. But if we really believe that we're going to get to 74, those 70 calls were trading for less than 25 cents a contract. And the wheels started turning in my head, Stress. I'm like, wait a second. If I buy these for 25 cents now and Cisco gets to 74, then those contracts are going to be worth at least $4 a piece, possibly more, depending on how quickly we get to that price target. That's a 20 bagger, as much as a 20 bagger on our original investment. That got me really excited.
The risk reward is insane. Our risk level is beautifully defined. We just took out those prior highs. Where we're wrong, even if we are wrong, what is the cost basis? 20 something cents, like you said. That's a trade I would put on all day. I love this setup.
Yeah. So that's what we're putting on here. I got one more chart here that you shared with me, Straz. I don't know if you wanted to riff on this, some other stocks, similar sector.
Right. It's just we get some pushback sometimes like, oh, the market remembers something from back in 2001. Yeah, it does. And look at the way it reacts when it takes out these highs. You know, this is Microsoft. Obviously, everybody knows them. ASML, which is one of the largest semiconductor names out there. If we showed AMD, NVIDIA, you'd see something very similar. And then, of course, everybody knows Adobe. So from 47 to 645, from like 70 to 800, from 59 to wherever Microsoft is 300 today, you know, you want to pay attention when you start to see these bases form. So Cisco is going to be on our radar now.
Absolutely. Well, Strazza, I'm excited about this trade. Look, it's a long shot. I fully acknowledge that. I'm fully accepting the fact that I might lose 100% of the capital I've invested in this trade, and that's okay. I've sized the position properly. So if that happens, it's not going to take me out of the game. It's just going to be a loss like any other loss. No big deal. But like you said, the risk to reward is so much in our favor here. If we get this right, we're looking at 20 times our investment, maybe more. I mean, these kind of setups don't happen often for us, but when they do, I get really excited. So Strazza, good work surfacing this, my friend. And we'll have a link to this blog post followed up in my Twitter stream there. So look for it there. And hey, good luck out there, everybody. Trade them well. Thanks for joining us. We'll see you next week. Take care. Take care, Strazza.
Later, guys.